Donald Trump is now the president-elect of the United States. This is what you need to know as a real estate investor. Hey everyone, it's Dave, and housing supply was a bigger issue throughout this 2024 campaign than any presidential election that I can remember. And now that Donald Trump has been declared the winner by the major media outlets, I want to recap what housing policies he's endorsed and what impact they'll have on the economy as a whole and on housing issues like supply and affordability. And as a reminder, we really don't do politics on this show, but high-level government policy is a reality we have to account for as investors. So that's what we're going to be talking about today. On his official campaign website, President-elect Trump says he intends to, quote, help new homebuyers. Republicans will reduce mortgage rates by slashing inflation, open limited portions of federal lands to allow for new home construction, promote home ownership through tax incentives and support for first-time home buyers, and cut unnecessarily regulation that raise housing costs. And as is typical at this point in the election or political cycle, we know some of these Trump ideas, but until he's actually back in office and inaugurated, we won't know the specifics of these policies. That said, I think there are three big policies that Trump has talked a lot about during the campaign, which have the biggest potential influence on the economy should they go into effect. And those three things are tariffs, tax cuts, and interest rates. And I'll touch on each of those, starting with tariffs. Trump has proposed a 60% tariff on goods imported from China and a 20% tariff on goods imported from all other countries. In September, we had an economist, Joel Naroff, on our sister show On the Market, and I asked him just a little bit about how tariffs work, because I've never really seen them in my lifetime, and how they would affect prices for American consumers. Here's what he said.
Tariffs are essentially fees placed on imported goods paid by the importers. That's something that has to be understood. Before, if you import from China a car, okay, where he wants to put, for example, 100% tariff on it, the importer has to come up with the money equal to the cost of the car, using that as an example.
So if a car costs, in this example, if a car costs $20,000, an 100% tariff would mean that the car company has to pay $20,000 just to get it into the United States so that they could sell it for $20,000. Is that right?
That's the simplest way of describing it, yes.
Yeah, I got to keep this one simple.
Who actually pays it depends upon, the size of the tariff and the kind of good and so on. It's the demand curve situation. But for the most part, significant portions of the tariffs typically get passed through because the producer, if they have to pay the tariff, then that cuts into their margin. So if you're talking about 25%, that kind of wipes out their margin, let alone 100%. If you're talking about the importer, then they have to pass that along to the retailer, who has to pass that along to the consumer. So under those circumstances, typically what happens is a significant portion, if not most, if not all, depending on the good, winds up being paid by the consumer. And that's how a tariff works. And that's why economists make the argument that tariffs essentially raise prices to the households. That's where it winds up in.
If former President Trump is considering this, what is he hoping to achieve?
Well, I think his goal is to price out foreign goods from U.S. markets. And therefore, those goods would have to be made up by either domestic production or production in other countries. So we have NAFTA kinds, we have Mexico and Canada, production could be shifted there, not necessarily to the U.S. But I think the concept is to protect U.S. producers. So by having competitors be priced out of the marketplace itself and therefore expand production in the U.S. That's ultimately the goal.
The corollary to Trump's tariff proposal is that he claims it would create enough revenue for the federal government to eliminate the individual income tax. Income taxes currently bring in nearly half of the government's entire revenue, so this would be just an enormous massive change to our financial system, our revenue collection system, that's really sort of impossible to fully analyze the implications of this until a firm proposal is put forth. But obviously, it's a policy we'll all be focused on closely should Trump choose to move ahead with it, and we'll report back on it once we know more. There's also the issue of sunsetting the tax cuts from Trump's previous 2017 Tax Cuts and Jobs Act. That legislation from a couple years ago reduced the top individual tax rate from almost 40% down to 37%. And without a new tax bill, those cuts would phase out in 2025, and we'd see our taxes go back up to pre-2017 rates. And Trump has said repeatedly that he intends to and wants to extend those 2017 cuts. And when Joel was on OTM back in September, I asked him about this also, about the potential impact of a rollback on homebuyers.
The upper income households are going to be able to afford the highest price housing out there, whether the tax rate is higher or where it is right now. The rise in the taxes are not going to change housing demand as far as that income group is concerned. And the key to this, which people aren't focusing on, but they have to, is those kinds of taxes were sunsetted in the bill that was passed in 2017. So we're going to be facing that issue in 2025, because at the end of 2025, a lot of those tax reductions disappear. And it's going to create the need to have another major tax bill, because I don't think anybody wants to go back all the way to where we were pre-2017.
So Trump has repeatedly stated he intends to extend the tax cuts from 2017, but over the course of his campaign, he's also talked about a couple of different tax proposals that I'll just mention here. He mentioned eliminating the cap on state and local tax deductions, which is currently limited to $10,000, and he has proposed lowering corporate tax rates below their current flat rate of 21%. He's also proposed no taxes on tips or overtime. So those are what he's talked about in terms of taxes. The third big economic pillar to watch with Trump is interest rates. Trump repeatedly said during the campaign that the Fed was adjusting their rates for political reasons. The Fed members are appointed by the president. Actually, Jerome Powell, the current Fed chairman, was appointed by Trump in his first term. But Fed governors and chairmen are almost impossible to remove from their position, which gives them a degree of political independence once in office. However, there is one federal governor whose term will expire next year, and Fed chair Jerome Powell's term expires in 2026. So Trump will have more options to replace them with people whose economic policy views align with his own. So I think the big takeaways from Trump's stated policies is uncertainty, right? Like that's somewhat normal, at least in recent history at this point in the political cycle. He's proposed things like huge tariffs and massive tax cuts that would be unusual or unprecedented throughout America's history. It's sort of just difficult at this point to predict the downstream effects on the housing market at this point, because they'd vary widely depending on how these policies are actually implemented. Congress will certainly have a say on that. So we don't want to make predictions without knowing the specifics. We also don't yet know if the Fed was planning to continue its current trajectory during a Trump term. Most people expect the Fed to decrease rates mildly over the next year, but it's possible Trump could influence the Fed to change course. So at this point, we have some idea of what will happen, but personally, I think it's wise to be in more of a wait and see mode in terms of the economy and the housing market. If some of these policies pass, it will have big implications on the economy. But without knowing the specifics, I just don't think it's appropriate to speculate. Instead, I'd keep an eye on these three policies as Trump is inaugurated in January and sets off his agenda in the months that follow. Thank you all so much for watching. Hopefully this video has been helpful to you, and we will of course update you all as we learn more about the specifics of these policies as they are discussed and potentially implemented. For BiggerPockets, I'm Dave Meyer. Thanks again.